Welcome to Thoughts on the Market. I'm Seth Carpenter, Morgan Stanley's Global Chief Economist.
And I'm Chetan Iyer, Chief Asia Economist.
And on today's episode, Chetan and I are going to be discussing the Bank of Japan and the role it has been playing in recent market turmoil. It's Friday, September 13th at 12:30 p.m. in New York.
And it's 5:30 p.m. in London.
Financial markets have been going back and forth for the past month or so, and a lot of what's been driving the market movements have been evolving expectations of what's going on at central banks. And right at the center of it has been the Bank of Japan, especially going back to their meeting at the very end of July. So Chetan, maybe you can just level set us about where things stand with the Bank of Japan right now and how they've been communicating with markets.
Well, I think what happened, Seth, is that Bank of Japan saw that there was a significant progress in inflation and wage growth dynamic. And with that, they went out and told the markets that they wanted to start now increasing rate hikes. And at the same time, the yen was weakening. And to ensure that they kind of convey to the markets that they want to be now taking rates higher, the governor of the central bank came out and indicated that they are far away from neutral. Now, while that was having the desired effect of bringing the yen down, I appreciate it. But at the same time, it caused a significant volatility in the equity markets and make it more challenging for the BOJ.
Okay, so I get that, but I would say the market knew for a long time that the Bank of Japan would be hiking. We've had that in our forecast for a while. So do you think that Governor Ueda really meant to be quite so aggressive? That meeting and his comments subsequently really were part of the contribution to all of this market turmoil that we saw in August. So do you think he meant to be so aggressive?
Well, not really. I think that's the reason why what we saw is that a few days later, when the Deputy Governor Uchida was supposed to speak, he tried to walk back that hawkishness of the governor. And what was very interesting is that the Deputy Governor came out and indicated that they do care for financial conditions. And if the financial conditions move a lot, it will have an impact on growth and inflation, and therefore conduct of monetary policy. In that sense, they conveyed the endogeneity of financial conditions and their reaction function. So I think since that point of time, the markets have had a little bit of reprieve that BOJ will not take up successive rate hikes, ignoring what happens to the financial conditions.
But this does feel a little bit like some back and forth, and we've seen in the market that the yen is getting a little bit whipsawed. So the Bank of Japan wants to hike and markets react strongly. And then the Bank of Japan comes out and says, no, we're not going to hike that much. And markets relax a little bit, but maybe that relaxation allows them to hike more. It kind of reminds me, I have to say, of the 2014 to 2015 period when the Federal Reserve was getting ready to raise interest rates for the first time off of the zero lower bound after the financial crisis. And markets reacted strongly when then Chair Yellen started talking about hiking, and because of the tightening of financial conditions, the Fed backed down. But then because markets relaxed, the Fed started talking about hiking again. Do you think that's an apt comparison for what's going on now?
Absolutely, Seth. I think it is exactly something similar that is going on with Bank of Japan.
So I guess the question then becomes, what happens next? We know with the Fed, they eventually did hike rates at the end of 2015. What do you think we're in line for with the Bank of Japan? And is it likely to be a bumpy ride in the future like it has been over the past couple months?
Well, so I think as far as the market's volatility is concerned, we do think that the fact that the BOJ has come out and indicated that their reaction function is such that they do care about financial conditions. Hopefully, we should not see the same kind of volatility that we saw at the start of the month of August. But as far as the next steps are concerned, we do see BOJ taking up one more rate hike in January 2025. And there is a risk that they might take up that rate hike in December. But the reason why we think that they will be able to take up one more rate hike is the fact that there is continued progress on wage growth and inflation. And wage growth is the most important variable that BOJ is tracking. We just got the last month's wage growth number. It has risen up to 3%. And going forward, we think that as the BOJ gets comfort that next year's wage negotiations are also heading in the right direction, they will be able to take one more rate hike in January 2025. Well, Seth, I think, when we are talking about this volatility that we saw in the financial markets and particularly yen, the other side of this story is what the Fed has to do and what is Fed indicating in terms of its policy path. And we saw that after the non-farm payrolls data, Governor Waller was indicating that the Fed could consider front-loading its rate cuts. What are your thoughts on that?
So we do think the Fed's getting ready to start cutting rates. Our baseline is that they move at 25 increments per meeting from now through the middle of next year. I would take Governor Waller's comments, though, about front-loading cuts, which I took to mean, the possibility of 50 basis point rate moves, very much in context and with a grain of salt. When he gave that speech, I think what he was trying to do, and I think the last paragraph of that speech really bears it out, he was saying there's a lot of uncertainty here. He said if the data suggests that they need to front load rates, then he would advocate for it. But he also said that if the data implied that they need to cut at consecutive meetings, he'd be in favor of that as well. So he was saying that the data are going to be the thing that drives the policy decisions. But thanks for asking that question, and thanks to the listeners. If you enjoy this podcast, please leave us a review wherever you listen and share thoughts on the market with a friend or a colleague today.
The preceding content is informational only and based on information available when created. It is not an offer or solicitation, nor is it tax or legal advice. It does not consider your financial circumstances and objectives and may not be suitable for you.